Welcome to Talk Tickers. Today, we're diving into the recent VICI Properties earnings call.
That's right.
Think of this as your, shortcut to understanding what went down, why it matters.
Exactly. We'll pull out the key bits.
Yeah, we'll break down the financials, the strategy, and what leadership sees coming down the pipe.
And it was, quite a quarter for them. They managed to deal with all their 2025 debt maturities.
Okay, that's significant.
Yeah. And importantly, they actually raised their AFO guidance for the full year.
AFO, adjusted funds from operations, right?
Correct. For Q1, that AFO per share was 58 cents. That's up 4.3% compared to last year.
Solid growth there. And the balance sheet. How's the debt looking?
Well, their net debt to annualized Q1 adjusted EBITDA is sitting around 5.3 times.
Okay.
And the average interest rate is 4.47% with about 6.7 years average maturity. So yeah, the picture seems pretty stable, maybe even showing some positive momentum.
Okay. Let's unpack this a bit more. They really seem to emphasize dividends, didn't they?
They did. They stressed how crucial dividends are for REIT total returns,
Right.
And pointed out that VG's yield is currently over 5%. And they use that term defended.
Defended. I like that. Because you think, does the market sometimes just overlook how powerful a steady dividend can be?
Absolutely. Especially now with some uncertainty around that defended dividend. Well, it feels like an anchor for investors.
Yeah.
It contributes a big chunk to total return. And the fact that VG feels confident enough to really highlight it, it kind of suggests they believe in the strength, the predictability of their cash flows.
Now, here's where things got really interesting for me. This new partnership with Red Rock Resorts.
Oh, yes, the North Fork project.
Exactly. They're committing up to $510 million. It's a, delayed draw term loan facility?
That's it. Money Red Rock can tap into as needed to build the North Fork Monocasino and Resort. It's on tribal land, Central California.
And it sounds like a pretty major development, due to open by September 2026. Lots of slots, tables, restaurants.
Yeah, the whole 9 yards. And the location, right off Highway 99, they mentioned 4.2 million people within a 2-hour drive. The potential seems, significant.
What really jumped out is that this is a first for them, right? Investing in gaming on tribal land.
It is, and it's also Red Rock's first time partnering up with a REIT like this.
Interesting dynamic.
It is. Red Rock has a long track record, developing and managing tribal casinos. That probably gave VICI Properties some comfort here.
Makes sense.
And it's worth noting, this loan isn't just VG. It's part of a bigger, $725 million package with major banks. So wider institutional buy-in.
And Red Rock's providing a guarantee to finish the project.
Yep, that's in there too. Reduces some risk for the lenders.
Okay, so they're comfortable with lending on tribal land here, thanks to Red Rock. But it sounds like they're maybe a bit more cautious about actually owning property there through sale leasebacks.
That's a really key distinction they made. The issue seems to be, the complexities. Owning property where only the tribe can actually run the gaming operations. It's not straightforward.
Right, different risk profile entirely.
Exactly. Lending is one thing. Being the landlord where you don't control the core business, which is subject to tribal sovereignty and rules, that's another layer. Their caution shows they understand the specific risks.
Okay, let's shift gears. What about their existing markets, particularly Las Vegas? They sounded pretty upbeat.
Yeah, definitely optimistic. They pointed to WrestleMania, Stanley Cup playoffs, the Sphere, conferences, lots of strong demand drivers.
And the international travel piece, only 12%.
Right. They seem to suggest that could provide some resilience if the global economy gets a bit shaky. Less exposure there.
Makes sense.
And regional gaming.
They expect it to hold up relatively well, even in, more volatile times. Seems to be a theme of resilience they're projecting.
Their Vegas optimism definitely tracks with all the investment you see there. It's becoming more than just gambling.
Absolutely. Entertainment, sports, business, it's diversifying.
Yeah.
And that helps spread the risk, makes it feel more resilient. That lower reliance on international visitors could indeed be a buffer. Okay. Let's touch on the financial management side. They've been busy in the capital markets.
They have issued $400 million in 3-year notes at 4.75% and another $900 million in 10-year notes at 5.625%.
Spreading out maturities there.
Seems like it. They also sold some shares, about $7.8 million, through their ATM program, raised about $254 million gross.
Okay. And the credit facility?
They recast and extended that, pushed it out to 2029. It gives them $3.2 billion in total liquidity. So plenty of dry powder.
So proactively managing debt, ensuring they have cash available, Seems prudent.
Definitely. Locking in rates, extending maturities, building flexibility. It looks like sound balance sheet
And
management.
the core performance numbers, margins look strong.
Very strong. High 90% range if you exclude non-cash items. That's typical for their triple net lease model where tenants cover most costs.
Right.
And their G&A, general and administrative costs, still really low as a percentage of revenue, like 1.5%. Very efficient.
And all that feeds into the increased guidance.
You'd think so. Yeah, the raised AFO guidance for 2025 is now between $2.33 and $2.36 per share. That's 3.8% year-over-year growth at the midpoint.
And that doesn't even include potential future deals.
Correct. They explicitly said it doesn't include future transactions or capital markets activity. So potential for more, maybe.
What about that pipeline? Do they give much color? They acknowledge things have maybe slowed a bit generally.
Yeah, they mentioned the macro volatility has sort of dampened growth ambitions across the wider gaming and experiential sectors, but they're still actively talking to operators.
Focusing on relationships, it sounded like.
Exactly, relationship-based opportunities. And they did mention about $130 million of committed capital that's not yet in the guidance.
Why not?
Just luck or final draw schedules, apparently. It's tied to projects like Great Wolf Northeast, Homefield Kalahari, and that North Fork project we discussed.
So more stuff potentially coming into the numbers later.
Seems likely. It shows there's activity, even if they're being cautious on the guidance front for now.
One specific point they addressed was tariffs. Any concern there?
They seemed pretty confident, actually. Said they trust their experienced partners, like Kane on the One Beverly Hills project and Red Rock, to manage and mitigate any impact on construction budgets.
Right, relying on partner expertise there.
Yeah, highlights the importance of picking the right partners who know how to handle supply chains and cost management.
Did they give updates on specific tenants? Like Century Casinos?
Briefly. Said recent CapEx investments at Century Properties should help improve rent coverage, and they're in regular contact.
Okay. And Caesars?
No immediate concerns on regional property performance there. They sounded pleased with Caesars' own investments in properties in places like New Orleans, Atlantic City, Lake Tahoe.
Good to hear.
Yeah, significant capital going in. They are keeping an eye on that Caesars Forum Convention Center call option later this year, though, looking at optimizing total return.
Interesting. What about new potential partnerships? Anything beyond current tenants?
Well, they mentioned ongoing talks with Kane International, potential future experiential investments beyond One Beverly Hills, maybe things like the St. James network of facilities.
So looking at adjacent sectors too.
Seems like it, but they were very clear about Australia, specifically Star Entertainment.
Oh, what was the take there?
No current interests. They cited significant regulatory and structural changes impacting that market. Basically, they want visibility and confidence in future earnings, and it sounds like they don't see that in Australia right now.
Prioritizing stability and predictability. Makes sense.
Yeah, very strategic, risk-aware approach. Focus where they understand the market and trust the partners.
And big picture strategy. Beyond just the numbers.
They talked about weatherproofing the business.
Yeah.
Really focusing on proactively managing debt and capital costs to build resilience.
Weatherproofing. Good term.
Yeah.
Yeah.
And they're also closely watching the New York gaming license process. RFPs expected soon. They support MGM's bid at a site where VG actually owns the land.
Potential upside there if MGM wins.
Could be. Aligns with their gaming expertise and supports a key partner.
All right, that brings us to our favorite segment. This is not financial advice. Time for some outrageous but plausible trade ideas based on all this.
Okay, let's brainstorm. So, first idea, playing on that dividend focus and the new tribal gaming angle.
Go on.
How about this? Go long VICI Properties stock, given that defended 5% plus yield and the potential upside from the Red Rock deal. And pair that by shorting a basket of, say, highly leveraged, non-dividend paying growth stocks, maybe in a sector facing some regulatory heat right now.
Okay, what's the thinking there?
The idea is, if the market gets choppy, VG's dividend acts as a sort of anchor, right? While those high leverage, no dividend growth names are probably more vulnerable to uncertainty or policy changes. Plus, the tribal gaming thing adds a potential kicker for VG that might not be fully priced in yet.
Interesting. Contrasting stability and growth potential against vulnerability. Okay, outrageous but plausible idea number 2.
Right. This one focuses on their balance sheet strength and the Vegas outlook.
Okay.
Consider going long VG Properties again. But this time, pair it with shorting the credit default swaps the CDS of a competitor, specifically one that's more heavily indebted, has big refinancing needs coming up soon, and maybe isn't as exposed to that resilient Las Vegas market as VG is.
So betting on VG's financial health versus a potentially weaker competitor.
Exactly. You're leveraging VG's strong balance sheet, their successful refinancing, their Vegas exposure against a peer that might be facing more immediate financial headwinds.
Right. Playing the relative strength.
Precisely. But, and this is crucial,
Let me guess.
these are purely hypothetical scenarios, just thought experiments, not actual investment recommendations.
Absolutely. Always do your own homework. Consider your own situation before making any decisions.
Couldn't have said it better myself.
Okay, that wraps up our deep dive into the VICI Properties earnings call. We've tried to pull out the key insights and give you some context.
Hopefully gives you a clearer picture of their recent performance and what they're thinking about the future.
Yeah, hopefully spark some thoughts. What stood out to you? What questions do you still have? We definitely encourage you to dig deeper yourself.
And one last time, this is not financial advice. Please do your own research.
Thanks for tuning in to Talk Tickers. Join us next time for another in-depth look at what's moving the markets.